Oh man, an epic short squeeze on Bitcoin takes us from 24.8 yesterday, now touching 26.3 in a massive short squeeze. What is going on in the market? What is causing this pump? How much further can we go? I'm going to cover that off and a lot more. If you appreciate these daily updates, smash up the likes. Don't forget to subscribe. If you want to trade in these moves, you can do so using Bybit. Affiliate link in the description supports this channel. Guys, check this move out yesterday. We wicked down to that 24.8 level. Now, why was that so important? You'll remember, if we jump up here to the daily chart and remove the CMA ribbon, I shared with you guys that we were forming a powerful M pattern. You see this M pattern here? And this M pattern has neckline right there at 24.8. And that's exactly where we wicked to yesterday. Now you're seeing, very importantly, that you're getting a little bit of support coming in from that neckline, with the bulls trying to prevent the breakdown from that M pattern. Now remember guys, the breakdown of this M pattern is not pretty. Look at this purple line. That's the measured move. It brings you down to 17,800. If this M pattern plays out, if we do indeed play this pattern out, break down, it's going to be a horrible price target. But the bulls are trying its best to bounce from here. That is what they're trying to do. And you're seeing this activate via a short squeeze. A lot of market participants right now over the last couple of days are preempting that M pattern, that double top reversal pattern, which I just shared with you. And they're trying to trade it all the way down to 17, 18,000. It's so obvious, right? And that pattern's been playing out for a very long time. We've covered it for weeks on end. But what's happened now is the bulls have managed to catch them in a short squeeze. So you can see here, these are 4-hourly candles I'm showing you right now. A couple of candlesticks ago, $25 million of shorts wrecked. Then you had another 5 million, followed by the latest 4-hourly candle with another 24 million wrecked. They're getting wrecked here, okay? These are big candlesticks here, relatively speaking, which you do not get every single day, and the shorts are getting squoze. But we do still have to be careful. This doesn't mean we're out of the neck of the woods, and I'm going to show you the key levels to watch out for and what the bulls will need to do and what the bears will need to do. So let's now jump back in. One more thing I do want to show you on the short squeeze is you've got to look at the funding rates. If you're not looking at the funding rates, you can miss moves like this. If you get this indicator here, which is aggregated funding rates, and apply it to your chart, you will see that the funding rates flipped positive. When they flipped positive, that means there's more bullish bets on the market. When they're very negative, it means a lot of people are shorting. So you can see here, it started flipping as people were abandoning their shorts to get out of this, right? To not get short squeezed. So you can see this was a precursor as this started to ramp up, that we were going to get this big price recovery a couple of candlesticks later. So another important indicator for you to look at are those people that are trading leverage. You guys know my opinion on leverage. It's the worst thing. I hate leverage. I hate margin trading. That is what creates the volatility in crypto and what keeps creating this start-stop function, which frustrates all of us. If we had no leverage in the system, if we turned off all futures and perps, we'd get less trading volume, of course. We'd get less crazy volatile days to trade. It wouldn't be great for a trader. But in terms of the long-term position of crypto, we'd be far further ahead right now. We would not have all this false start. People wouldn't fall out of love with crypto. It'll be a very straightforward journey to the upside, being driven on fundamental data, not just swings like this, which is based on leverage in the system. Now, jumping over, we can still see fear and greed index is still in this fear territory, right? It's at 30. People are fearful of this market, and that's a good thing. It means my radar needs to be on, and I need to be prepared to do some work. And the main reason the market is fearful right now is because of this balancing block we're on, this balancing beam we're on at around that 24.8. Remember, that was resistance here, and it's turned into support. We turned into support there, and we turned it into support here, where we're trying to. If we cannot do this, I'm going to show you the key levels. If we cannot do this, we still have to watch out for the next pivot point. Remember, the next pivot point breaking down from this big channel, which is what we're doing. The first pivot point was here, 24.8. We've touched that. Second pivot point is all the way here at 20,000 flat, and we'll look for that price target to play out. Then your third and final price target is obviously the M pattern playing all the way out at 17,800. Plus the final horrible target, which we don't really want to play out, which is coming right to the bottom here, which brings you to that 16,500 level. Hopefully we don't need to come anywhere near that on crypto. Now, for those shouting out Bitcoin to 18,000, Bitcoin to 19, Bitcoin to just random numbers, don't listen to those people. Follow what the price is showing you. Follow the price structure, clear M pattern playing out. Therefore, we have to respect 24.8, we have to respect 20,000, and we can respect the bottom. Shouting out Bitcoin to 5,000 is all irrelevant, right? That's just people being sensationalist to get views, to get clicks. Ignore those people. They're not going to help your trading. So we're seeing massive inflows in the market. We are seeing this short squeeze. You're seeing 4% up almost here on Bitcoin on the day, and all coins are responding, right? Last couple of days, we saw all coins getting wrecked. We are now seeing all coins responding. Ethereum leading the charge up 3.8%. We are seeing Phantom up 2.77%. Solana recovering 3.4% after the FTX worries. But we have to cover off, do we think this is going to survive? Of course they're moving since Bitcoin is moving, but has anything fundamentally changed? That's what we need to ask ourselves, right? Because the reality is, when you look at this chart here on the daily chart and I bring out the EMA ribbon, what will you notice straight away? All we're doing is running into our daily EMA ribbon, right? This is a lovely daily candlestick. It's good that it's up 3.8%. But really, in the great scheme of things, this is still a downward channel. It's still a consolidation, and we're still stuck here running into our EMA ribbon. So yes, it's a starting point. Yes, it's good that we managed to bounce from that 24.8K level. That was really important to avoid the M pattern. But the reality is we've got a lot more work to do. And the real key levels we need to be looking for is, can we regain this EMA ribbon? That would need 27.3 daily candle close or above. Are we going to get that today? Who knows? Seems unlikely. Can we get it over the next couple of days? It's a possibility. But the problem is, will the bulls lose steam, and will the bears step up to reject us from the EMA ribbon and push us down again to go play out that M pattern which I just shared with you? For the bulls, getting past 27.3 is going to be important, and then getting past this peak. If you remember here, guys, about on the 29th of August, so just over 13 days, 2 weeks ago, we had this nice positive candlestick where Grayscale won their case against the SEC, where they had to go and review their application to convert GBTC fund into a spot ETF. We managed to wick as high here as 28.2 roughly. So again, that's another key level that we have to get above in order to nullify this. And the good thing is, if we can get above that level, what you notice is the opposite. We start forming what is known as a W pattern, which is the opposite of an M pattern, which could start to work us back to the upside and get us back to 30K. So it's all to play for here right now. Bears want to play out this M pattern. The bulls will want to regain its EMA ribbon and start working its way back upwards. My bias is still leaning to the downside just because of the news arc we have. And of course, you guys know we've got critical events coming up, starting off tomorrow with CPI. So Wednesday, we do have the CPI data coming out. Make sure you stay tuned on this channel. I will be covering all of that off with you guys, followed by PPI inflation on Thursday. Both of those very important metrics for Jerome Powell to be looking at going into our next FOMC meeting, which is on September the 20th. Now, that meeting is in 8 days' time from now, and the markets are firmly expecting that we're going to get a pause, right? 92% of the market is expecting a pause. If anything changes, if that data surprises to the downside, in other words, if inflation comes in too hot still, this will have consequences, because the market is not expecting a rate hike next week. They're just not expecting it. So all of this will need to be unwound, and the way that's going to be unwound is pain in the markets. And that is why, despite the short squeeze we're seeing on Bitcoin, traditional markets are not happy this morning to open up, right? You are seeing the NASDAQ down 0.37 in the pre-market, 0.32 on the S&P. Dollar index continuing to show strength here. So this move is not a fundamental change. This move we're seeing on Bitcoin today is not the market suddenly becoming exciting and rotating risk on. No, dollar index is having another positive day, but Bitcoin is having a specific short squeeze, which is what I've just shared with you. So there you have it, guys. That's what's happening in the market. If you appreciate these types of updates explaining exactly what's going on and what I'm doing in this market, smash up the likes. Don't forget to subscribe. Check out my TA course, ijaz.uk/TA to lock in the price today, and I'll see you in the next one.